Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the New Zealand versus US dollar. The Reserve Bank of New Zealand had their interest rate decision earlier today, and that interest rate decision had a little bit of a biased twist, even though they kept rates unchanged. So let's talk about it and talk about the price action in the New Zealand versus US dollar currency pair. The bias twist from the Reserve Bank of New Zealand was that they were a little bit more hawkish than the market expected, and that helped to push the price of the New Zealand versus US dollar to the upside. And in the process, the price moved above the 61.8% retracement of the move down from this high going back to July to the low price that we had in the month of October. The 61.8% retracement came in at 0.61674, and the price moved above that level, extending up to around the 0.6162 12-ish type area before rotating back to the downside. As you can see, we are back below the 61.8% retracement, which gives the sellers a little bit more confidence, or the sellers at least are in the game for if on the failed break above the that retracement level. Now, having said that, there is, if they're going to take more control, this area right down here where the green line that represents a 200-day moving average and the 50% retracement of the same move down from this high to this low comes in at near the same level as 0.6092. So with the price currently trading at 0.6150, we're probably closer to the 67, or we are closer to the 67 level on the top side that would need to be broken to increase the bullish bias, and or tested and found sellers against that level. That's something that can happen as well. So this level at the 67 level is now resistance for the New Zealand versus US dollar until the price moves back above that level. So don't be surprised if you see sellers leaning against that level and trying to force the price back down to the 200-day moving average 50% retracement. Conversely, if we if we do go down to this area, I would expect that with the two key technical levels, a 200-day, 50% retracement level at the same level, that there would be a strong support against that level on a dip, and with the stop below that level. So those are our defining levels, up here against the 61.8 and down here against the 50% retracement and 200-day moving average. Now let's see if there's any other clues from the hourly chart that we can gather that would give us more clues as far as the bias goes or trading decision making goes for this currency pair. Actually, I'm going to look at the 4-hour chart. And here's our 61.8% retracement level at the 67 level on the top side. Here's our 200-day moving average of 50% retracement level near the 0.6092 level. And as you can see, there's really nothing in this area right through here. As a matter of fact, if we were to put a look at this level right through here, this level where we found support, and then look at this level right here, which is the 61.8. This swing area through here was defined by a number of different swing lows and swing highs through here, and so this area right here between the 0.6104 and 0.6117 is probably the next closest support. So if we were to go lower here, it would quite frankly probably find some support buyers against this area right here. Note that the low price rate, or the high price right here, probably in the beginning of Tuesday's trade, also stalled within this area. So there's something to say that perhaps this would be an interim support level, that if the price were to go down here, we'd find support buyers. Why? Because the trend is more to the upside here. So the sellers have to prove themselves. And with the break to the upside here, break above the 61.8% retracement, they have to prove that they can get back through these levels, including the 50%, including the 200-day moving average. So the next step would be to find support buyers against the 17 level, maybe down to the 04 level. If it breaks below that level, then it seems like a fait accompli that would head down to the 200-day moving average, head down to the 50% retracement. But right now, it would seem like the easiest hurdle to get through would be the 67 level up here, but as you can see over the last two bars here, it's been having a little bit of a trouble. So don't be surprised if you see sellers against that level as the battle continues and the market waits for really the next shove one way or the other. So that's a technical look at the New Zealand versus US dollar after the Reserve Bank of New Zealand decision. My name is Greg McCloskey. Hope you found this video useful. Good fortune with your trading. Bye-bye now.